Welcome to Yahoo Finance's flagship show, Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures kicking off December trading in the red. Equities are sliding with risk assets after the S&P 500 barely managed to eke out a 7th straight month of gains. Crypto in particular is under pressure this morning. Bitcoin falling below $86,000 per token, bringing momentum back to the sell-off that had appeared to have settled a little bit. Ether and Solana are also sinking along with Bitcoin. Plus, investors are keeping a close eye on the Federal Reserve. The central bank will issue its next rate decision on December 10th. Traders are pricing in a 25 basis point rate cut at the December meeting. This week, by the way, we'll get delayed economic data, including the Fed's preferred PCE inflation gauge. Wall Street's also watching for updates on the future of the Fed. The president told reporters on Air Force One he has made a decision on the next Fed chair, and he'll make an announcement soon. Trump's chief economic advisor, Kevin Hassett, is seen as the likely choice to succeed current Fed Chair Jerome Powell. That's according to Bloomberg. And holiday shopping still going on this Cyber Monday. Adobe Analytics expects online sales to rise 6.3% on the year. However, that would mark a smaller year-over-year gain compared to 2024. Black Friday shopping did show the consumers holding up. Retail sales, excluding autos, rose 4.1%, according to data from MasterCard Spending Pulse. That surpassed the 3.4% figure recorded last year. Wall Street's going to get an additional read on consumer spending this week from companies including Macy's and discount retailers Dollar General and Dollar Tree. They will report their earnings results. Let's get a check-in on stock futures. We are seeing indications for a drop at the open here this morning. In the holiday shortened Friday trading session, we saw a little bit of a gain here. That pushed at least the S&P 500 into the green, although the Nasdaq still finished the month in the red. And this morning, Nasdaq futures showing indications for the biggest drop of the three, down 0.9%. So let's dig into our top stories of the day. Stocks lower to kick off the final month of the year. Discount retail earnings on deck this week following a strong start to the holiday shopping season, and the crypto sell-off resuming. Joining me now, markets and data editor Jared Blickery, senior reporter Brooke DePluma live at the Nasdaq, and senior markets reporter Ines Ferre. Jared, let's start with you and this sell-off that is coming back now that everybody's back at work this morning. We're seeing the red on the screen.
Yes, inauspicious start to the month, which is supposed to lean bullish. So let's talk about a few different things here, and we'll get to seasonality in a second. But behind me, you see the Wi-Fi Interactive. This is our map of the world. A lot of red here. The only bright spots, Hong Kong and mainland China. So let's dig into what we're seeing in the U.S. And first, I'm going to stop by the VIX, which is a little bit elevated. You can see it's up a couple points here to 18. Not a huge concern. Above 20 is when we start to gather some steam, and that tends to affect stocks to the downside when the VIX is moving up, remember. Here's a 10-year T-note yield. Yields are jumping. So the 10-year is up 5 basis points to 4.06%. The 30-year is up 6 basis points to 4.72%. Meanwhile, the dollar index, that is a basket of the U.S. dollar versus a bunch of other currencies, that is slumping here. And so what's going on? Because a lot of times the dollar and yields will go in the same direction. And also important to point out that yields move the opposite direction of bond prices. So investors are selling the dollar, they're also selling bonds. And why is this? It might be because over in Japan, there have been hints that they're going to hike their rates. So with higher rates, Japan being another risk-free and scare quotes economy, that would draw investments out of the US and potentially abroad there. So that's kind of what's going on there. There's also Kevin Hassett. We got to get to that news, and I know you'll talk about that more in depth there. Just the fact that he might be a more dovish Fed chair, that is also stoking some beliefs that the US dollar might be selling off because of that. I think that case has yet to be proven, but let's just kind of tick through the sector action before we proceed here. This is what happened Friday, and you can see healthcare was the only mover to the downside. It's a pretty nice bullish day to end the month. And here's what's happening in the little rectangles below. All we see positive so far is energy and staples. Meanwhile, tech is leading to the downside. That's down almost 1%, 0.9%. Also, utilities, part of the AI trade now, that's in number 2 spot. Industrials, consumer discretionary. So it looks like the cyclicals are getting sold to start the month, Julie.
Okay, so that brings us to the start of the month, December 1st, here we are. And you mentioned that December tends to lean bullish, but I've seen some stuff out there too that's less true in more recent years, I guess.
Yeah, so it used to be a really strong play. And by the way, the Santa Claus rally, which we talk about quite a bit, only happens at the end of the month. But I did bring a chart with me, maybe we can show that now, that has each of the months and their median returns going all the way back to 1990. And as you'll see, if we have it, December is right in the middle of the pack. So November, which is the second to the right there, that is the most bullish leaning month of the year. October also very strong. I think that's number 2. And December kind of quiets down. And as you said, Julie, we haven't seen the December bullishness that we typically saw in years past in these last few years. And that kind of started around the pandemic, but you can even go back to 2018 when we had a near bear market in December. We typically don't see really big sell-offs in December unless we are at market tops and bottoms. Doesn't look like that's what's happening right now. But I think in terms of seasonality, one of the other things that Ryan Dietrich has pointed out is that when the S&P is up quite a bit as it is right now, 15, 20% in that range, you do see the first couple of weeks of December, that first half of the month, tend to consolidate. Also want to point out, I brought a chart of VIX seasonality, and what we tend to see after the VIX peaks in October, that will trend down into the new year. So in green, we have what's actually happened green we have what's actually happened this year, and white is what usually happens. And so far, we've seen things kind of align. Now, the April episode of the post-Liberation Day, that big spike there, that was an aberration, but nevertheless, we do see volatility trending down. That's what's supposed to happen. So notwithstanding all the hiccups that we're seeing today, I think the situation with the yen is maybe a little bit overblown in terms of stock futures, if that is a cause. I would expect that situation to right itself into the close today and tomorrow, but we got to keep an eye. If we see the US dollar drop quite a bit more, that's going to get traders' eyes and maybe think, okay, is the world selling US dollars again?
Yeah, we'll definitely be watching that closely. I mean, the other thing that has been sort of a weird sort of tail wagging the dog as of late has been the relationship between crypto and stocks. It seemed to have faded a little bit, right? But then this morning again, we got risk off everything.
Yeah, Julie, and that yen issue that Jared was just talking about, one strategist pointing to the last time that this happened back in August of 2024, you saw Bitcoin going down 18%, but then a couple months later, it recovered. Even the most sort of bearish or near-term bearish sort of strategists when it comes to Bitcoin are saying that this sell-off seems to be a bit excessive. But you do have thin liquidity. The retail is absent. You have had outflows. November was the second worst month for outflows of ETFs, Bitcoin ETFs. So that is sort of painting a scenario whereby some strategists are seeing that the range, either Bitcoin is still trying to find a bottom, or that the range could be anywhere. I've seen some estimates between 70 and 100,000 for the end of the year. December tends to be a consolidation period for Bitcoin. It's now down 7% year to date, Julie.
Well, and we continue to watch what's going on with Strategy, aka, or formerly known as MicroStrategy. Over the weekend, the CEO, not Michael Saylor, who's the executive chairman, but the CEO, Fang Lei, said on a podcast that they would sell Bitcoin if they had to sell Bitcoin. But then they came out with an update this morning and said they bought more Bitcoin and they're creating a dollar reserve, Ines.
Yeah, that's right. Because the concern has been by some investors that if Bitcoin were to go low enough, then they would have to be forced to sell tokens in order to pay for their dividends and also pay for interest on debt. And so what they've announced now is this US dollar reserve. So this kind of is in response, or it appears to be in response to this concern. And what this would allow for them, it's a $1.44 billion of a US dollar reserve. So this would be and they say that this would be to pay dividends. This would also pay interest on debt if volatility should continue with Bitcoin. And they're assuming that Bitcoin would stay in the range anywhere between 85,000 to 110,000 by year end. But this matters because basically this is giving a cushion. This is saying, hey, we don't have to sell any Bitcoin. We've got this reserve. If we go into a crypto winter, we're set. And as you mentioned, also, by the way, they did buy 130 tokens last week.
Yeah, they also updated their forecast and said, well, Bitcoin's lower than it has been, so we have to update our overall numbers. Just quickly, I mentioned, it's sort of risk off this morning, but there are a couple assets that are rising, gold and silver.
Yep, gold and silver are the ones that have been rising recently also. Look, we're looking at gold right now that is up 64% year to date. You've got silver that's up more than 90% year to date. The metals space is still bullish. I mean, Wall Street is still bullish on metals, especially when you talk about gold and the Fed easing and going into next year. You've got estimates for gold for new all-time highs for gold. As far as silver's concerned, it has reached a nominal all-time high. When adjusted for inflation, it's still off of the 1980 adjusted for inflation, but gold has cleared that hurdle. It is adjusted for inflation. Has cleared the all-time high hurdle. But nevertheless, look, investors we're expecting that the other metals besides gold would be catching up to gold, and this tends to happen when gold rises, other metals hockey stick as well.
And then we also got to talk about Cyber Monday. People still looking for those deals that are out there. What do the numbers look like so far, Brooke?
Julie, well, what we're hearing from Adobe Analytics is that they expect that consumers will spend $14.2 billion on this Cyber Monday. And they're really going to splurge on those big ticket items. Think electronics, think furniture, think apparel. And get this, between the hours of 8 to 10 p.m., Adobe predicts that $16 million will be spent every single minute. And this really comes at a time where we've been talking about this all year long. Consumers are extremely deal seeking. They're really looking to get the biggest promotions before they jump in and buy those big ticket items. And over the weekend, we saw that play out. Between Saturday and Sunday, $11.8 billion were spent. And on Black Friday alone, $11.8 billion were spent as well. And this comes as we've been hearing from so many big box retailers like Walmart and Target dish out some pretty good deals, maybe not as steep of discounts as in years past, but definitely 20 and 30% seems to be the go-to this holiday season.
And we're going to hear from many of these retailers this week also. I mean, we've heard from a lot of retailers, but what are some of the themes to look for this week?
Yeah, well, for one, we'll hear from department store Macy's. They're in the midst of that mega turnaround story. And if you take a look at their stock, it's up about 40% year to date as the company really plans to shutter about 150 stores. That currently underway. And also we heard that the back to school season was pretty good for the company. And so we'll expect to hear more about how maybe deals, promotions, and also high income consumers played into another strong third quarter. And that's what the Wall Street expects. And on the flip side, we're also hearing from discount retailers, Dollar Tree, Dollar General, as well as Five Below. And now think about it. The third quarter was during that time when we did have that government shutdown. And so it'll be interesting to hear how exactly these discount retailers performed during that time when that low income consumer was under pressure. They were not, or rather they were at risk of losing those SNAP benefits. Also, those stores like Dollar Tree and Dollar General have been leaning into multi-price strategies. That's been attracting high income consumers. And then to wrap up the week, we'll also hear from American Eagle. They've been playing around with less discounts, and they also announced that partnership with Travis Kelce and are still feeling a bit of a momentum from that Jean campaign with Sydney Sweeney as well. And so lots of different insight on how the consumer is holding up ahead of the holiday and how they're leaning into this environment where deals are definitely the way that they're going.
Yeah, that should be interesting to get those numbers. Thank you so much, guys. Jared, Brooke, Ines, appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. Welcome back to Morning Brief presented by Robinhood. Now time for some of today's trending tickers. We are watching Synopsys, Strategy, and Accenture. First up is Synopsys. Those shares jumping after NVIDIA announced a $2 billion investment in the chip software maker. Its Synopsys deal adds to a series of investments that NVIDIA has made with companies, including OpenAI and CoreWeave, involved in the AI economy. However, NVIDIA's investments have raised concerns of circular financing deals. Synopsys is one of the largest providers of software and services used to design electronic components. It also, by the way, is a longtime partner of and client of NVIDIA. Next up is Strategy. The Bitcoin giant unveiling a dollar reserve to soothe concerns about possible Bitcoin sales. The company says it has created a $1.4 billion reserve to fund future dividend and interest payments. The reserve would cover at least 21 months of dividend payments. That is maybe easing concerns. The company might have to sell some of its Bitcoin holdings, although the shares are down 5% this morning. The company purchased 130 Bitcoin between November 17th and 30th. Strategy now holds 650,000 Bitcoin. And finally, Accenture, the consulting giant, will partner with OpenAI on enterprise AI adoption. The company's announced the collaboration to help enterprise clients integrate agentic AI systems into their businesses. Accenture will equip tens of thousands of its employees with ChatGPT Enterprise, leveraging IT consulting, operations, and delivery work. Well, post-Thanksgiving, markets are back in risk-off mode this morning. Equities seemingly stuck between possible Federal Reserve dovishness and the risk aversion signals being sent by the crypto markets. Joining me now, Steve Sosnick, Interactive Brokers Chief Strategist. Steve, it's great to see you. Thanks for being with us. Hope you had a great holiday. Let's talk about the sort of push and pull in the markets here, because, we're getting these signals that maybe Kevin Hassett's going to be the next leader of the Fed. The markets are pricing in a rate cut coming up. But then you got crypto selling off on the other side. You got this risk aversion. What's going on here?
Well, good morning, Julie. Happy Monday, and I hope you had a good Thanksgiving as well. There are a lot of cross currents. I think, today, I think, first of all, it's hard to sort of take last week as too much of a starting point, because we really went up on very light volume. Essentially, this morning, we're giving back Friday's gains. And while I've gotten a lot of questions this morning from people about why are we down so much, not a single person asked me on Friday, why are we rallying mysteriously on no volume? We're supposed to. It's the end of the month. There was window dressing, it was a half day. Don't short adult tape, et cetera. But now we're just sort of giving that back a little bit. Obviously, the Bitcoin story is a bit more notable. And I have been noting that to a certain extent, algorithms are trading off of Bitcoin as a proxy for risk aversion or risk sentiment. And right now, the risk sentiment kind of fell right out of bed today. The proximate cause there was a big backup in Japanese bond yields, a big rise in the price of the yen. That makes the carry trade harder to come by because a lot of people use yen to finance other investments. And it's all, it all sort of spirals upon itself. But I'm not going to read too much into it right now, again, because so much of this was built off of a light volume rally in a whole bunch of assets.
Fair enough. And, people are back from Thanksgiving, but maybe not seeing huge volumes necessarily here as we sort of get back underway. And so as you look at the outlook for rates, though, do you think that any positivity that comes if the Fed confirms and actually cuts rates, is that already priced into markets or not, because we've been seeing things sell off recently?
I think we have been pricing that in. And I think the rally that we saw, again, I discounted last week to a certain extent, but the rally began a couple of days prior. And the rally began as Fed funds expectations improved. And that actually is a pretty healthy reason for a rally. We went from, call it 30% to over 80% in a fairly short period of time. That's a big rejiggering of Fed rate expectations. And it's also no coincidence that the last high in the S&P 500 was basically literally coincided with the last FOMC meeting, at which point, Chair Powell threw some cold water on the idea of expecting a pattern of rate cuts going forward. And so I think we are repricing along that end. I think, you alluded to the Kevin Hassett story. I'll have to see. I'm going to watch the 10 years and some of the longer term instruments because if he is hewing to sort of the president's model of lower rates, forever, so to speak. I think people will start to get concerned about a rekindling of inflation and inflation expectations because you can't necessarily have both. But I think right now, I think the market is just more enamored with basically, as I mentioned, the algorithms are trading off of Bitcoin. They're also trading off of the probability of a cut at the next meeting.
Right. And let's talk about AI too. I mean, I just mentioned a moment ago a couple of new AI headlines this morning. NVIDIA buying $2 billion worth of Synopsys, OpenAI now signing on Accenture partnership there, which is sort of like almost a daily occurrence, these kinds of headlines at this point. Is there just sort of a law of diminishing returns? I mean, where is the enthusiasm for the AI trade right now? Is it just in temporary hiding?
I think in some regards it is. I think there's been much more of a reassessment of whether AI is bringing bottom line efficiencies to the end users, not just to the producers of the chips and the hardware, not just to the hyperscalers. Certainly, the rally in Accenture that you alluded to earlier is based off of that premise, although it does sort of have a little reminiscent sense. It's a little bit reminiscent of sort of 1999 or 2000, when companies would get a 5% bump because they announced they were beginning a website. So I still want to make sure that this is producing bottom line results. I think the market is getting a bit more discriminating in that regard, which is a good thing, because quite frankly, if you're spending money or investing money, you really should be paying attention to what the end results of that investment are. But I think, some of the bloom is off the rose, but I still think the mentality is still behind the AI trade, because quite frankly, it needs to be, because it's such a dominant force in the market right now.
And just real quickly, Steve, between now and the end of the year, any big catalyst that you would be looking for? I mean, is it just the Fed meeting? Is it Oracle earnings? Like, what are you watching?
Well, it will be the Fed meeting. It will be sort of the data dump, so to speak, as we start to get data coming in. It'll be delayed, but I think we're going to start to get a better picture. And then, you get back into the low volume period, and I think that sort of becomes the focus in and of itself, because people, again, it's just after 9 o'clock on Monday morning, and I've already gotten several questions about seasonality and Santa Claus rallies and things of that nature. So I think there's a lot of that baked in, and those are really going to be the main catalysts, I think.
All right, great to see you, Steve. Thanks so much for joining us.
Thanks, Julie.
Coming up on Yahoo Finance is Opening Bid with our executive editor, Brian Sozzi. Saz, what's coming up on the show today?
Hey, Julie, we're going to dig more into this sell-off in Bitcoin. Not a good way to start the trading month for the crypto faithful out there. And of course, Julie, how can we not touch on Cyber Monday? Black Friday seemed to have started well. The Cyber Monday deals are out there.
What'd you pick up?
I bought myself nothing. I don't need anything, Julie.
No, what about gifts? What about gifts? Did you buy anything for anybody else?
I'm gonna wait till last minute this year. I'm just not in the holiday shopping mood quite yet. I don't need anything. My life is very bountiful. I need nothing else.
Okay.
Just saying.
Gifts. You should get something for the loved ones.
You could get me something, Julie. I want something from you.
Okay, I got to give that some thought.
Thank you.
All right, that does it for Morning Brief, presented by Robinhood. Much more ahead on Yahoo Finance.